Good morning. All right, let's see where we're at, where we might be going. Yesterday was somewhat unexpected, the extent of how far things went as they did. And, we started yesterday's pre market with the same analysis that we do each day as to support, resistance, trends, and so on. And one of the things mentioned was, well, wider range bar. If it's going to be bullish, stay in the upper half of the wider range bar. This was the line at the time. I think it was this one. What is that? 35.20. No, that was under the prior day's low, right, as our first reference point of support. But with a range expansion bar, we look for it, if it's going to be bullish, we don't know if it's going to be, to stay in the upper half of the wider range bar. Well, not only did it not stay in the upper half, it went below the prior day's low and it kept going. And so at different reference points of support, the sellers just kept coming. And while there was stabilization at different times, the sellers kept control. And one of the things that I mentioned in the room yesterday, toward the end of the day, was that, with these kind of days, they're unexpected. Like, we all know that at some point the market's going to correct, right? But we had those same thoughts maybe a week ago or 2 weeks ago. Point being, a big kind of mini crash day, so to speak, because that's a giant bar that you're looking at on the daily chart. Of course, we'd all agree to that, and it cut through multiple bars, is bearish. But to have a range expansion day like that, while we would say, hey, a correction is coming of some type, for a big part of it to come in one day is unusual. It happens, but unusual. So you can see it stopped right at the 20 MA on the daily charts, a simple period moving average. And there really isn't much to the left here. Let's just pull this down. So, as it came down to this level, you could see on a 5-minute chart, you kind of have to expand it a little bit. These bars that overlap each other right there, there's the stabilization on the smaller time frames as it goes down there. So as prices drop to different levels, there's always going to be buyers, especially, a range that drops like this vertically. It stabilized for a while there, and then it fell again, and so on. So as it breaks, and we start looking to other levels, you can see it stabilized there, and then it failed, and we look to other levels to the left. We see that area, there was a downside shakeout right there where I'm pointing, and it came back up. That was a nice bullish pattern that started the next move higher right there. So as it came down to this point, well, a little bit too much, I guess. So many agreed. Institutions said, "Oh, let's back off here." Maybe, at this point we think, well, they'll just sell on a bounce, which would make sense. But daily chart's still in an uptrend. So one of the concepts that we have to keep in mind with everything that we look at is that there's two sides of analysis, meaning this wide range bar is bearish. It suggests lower prices are coming. However, over my years of doing this, I've seen a lot of wide range bars that I would have bet are going lower. They did not. So I don't know what this one's going to do, but as this develops, we'll get a better idea. And the idea is that this wide range bar creates voids. Right? Those of you that have been around for a while, you've heard me say that wide range bars in a smaller time frame are a momentum move, and they create voids. So while this is a power bar, the other side of it is it's the weakest link in this move. And what does that mean? Well, it came down so fast that there's nothing up above to stop it from going higher. So what we do here with our method is now focus and see where it creates resistance. And this is where, let's say, the subjective analysis tools, which we do not use, we'll just wait to see the pattern as it forms. But those that'll use Fibonacci retracements, they'll use VWAPs, they'll use clouds, they'll use Bollinger Bands, they'll use everything under the listing of your indicators in any of the platforms to try and say this is the point, of the hidden resistance, right? I think that's one of the marketing terms, the hidden resistance that no one else sees, right? So anyway, what we'll be looking for is it to form a pivot, right? So once it forms a pivot, and I'm not sure, well, this bar will need another bar to the right, which will come soon. And then this will create a pivot, and the software will put a PH up here. Other software packages will put a dot, whatever. We'll know that that has 3 lower high bars to the left and right. Once it does that, it's created a reference point of resistance where there is none. And then we'll see if a retest of that area results in a next move to the downside. Now, typically days like this are followed by narrow range days. Well, there's a giant wide range day, so almost anything that stays in the lower half of this bar is going to be relatively narrow range. And the same thing where we're looking for a range expansion on the upside to stay in the upper half, well, it's the same thing here. If this is really bearish, it's going to stay in the lower half, and ideally it's going to stay down here, right, in the lower 25-30% of that bar. It's going to jiggle around, and then we'll see what forms here and if it can then come down to the next level, right? Step by step process. 20 MA, 50s down here, and then down here there's nothing between here and here, which opens up the door to a relatively sizable drop maybe next week. This is September, which we discussed is a bearish month historically. So this seemed to happen right on cue. And so we'll follow it along. And Qs, 20 MA, not retracing very much. Right? So what has been the strongest now is showing some relative weakness. And is there anything to the left here? And notice, I didn't mention it over there, but notice the topping tail now on the weekly time frame after such a run. So it tried to stop on the way down here. I don't know if it actually did. I don't remember. Tried to stop here. You can see those bars where that little whipsaw was going on. And then it went down to the next level and where it's been holding. So if it can hold here, we'll just have to see how this sets up. It is possibly could be long intraday trades. I don't know yet. So far it's just messy what's going on here. You can see on the 15-minute how it went up and it came back down. And so our bias would be, now as this begins to, and we need more bars, just to create a pivot here. If it should stay in the lower half over here, let's say until 10 o'clock or 10:30, this then becomes what we call an upside shakeout, where it popped up and it came back in, and when it hits support, it keeps going sideways. And that is weakness, because at support, buyers are supposed to want to step up again and build a base, try and push it higher, and that would then open up the door to maybe more downside today. We shall see. YM is actually up 128 points here. Not so bad. And so when we look at these big red bars, we look at YM, just eyeballing it. We don't have to measure it and say, well, smaller. It kind of held this area over here. The 20 MA was closer and it held. And so it's still, straighten that out. It's still in the bottom part of that bar, right? And we'll just see how this develops. And this is one of those, situations where we can look beyond what's directly to the left to see for something subjective. Is there any resistance there? And so the only thing that sticks in my eye, it points to my eye anyway, I should say, is that area right there of that pivot on the other side. But maybe it comes into play as a self-fulfilling prophecy. Others looking at it, but as you can see, there's just nothing there. And Russell, this was, I guess, the biggest failure of this pattern shaping up, which we spoke about. The pullback to the 20, the mess, the red bar ignored, the bullish 180 reversal with larger range expansion bars, and then this move. So this day where there was a buying frenzy into the close, and we could say, well, that was kind of a heads up, but it could have gapped up yesterday. Just because you have that buying frenzy into the close, it didn't mean it had to do what it did yesterday, gapping as it did. But as the selling started, it became one of these situations of a selling frenzy of, holy crap, this thing isn't bouncing. The buyers aren't stepping up always, as they did to buy the dip. And more selling came in. So, this pattern failing like that is really, quite bearish. But, now we just do the same thing. Does it stay in the lower half? You've got the void. It's retraced a decent amount more than the others. So we'll see how it develops. Excuse me. Bonds. Sell setup here. We know that's at support from looking at the other pre-markets that we've done. So it's a little congestion here and here, sell setup. And so now that this is so close to support, many times this will hold since it's so next low is so close by. Overall trading range, we'll see if that holds or not. And oil, what a mess. Just has been a mess. Looks lower, it's got the next support level here. It's something that I would stay away from. Even intraday, it's not interesting to me. And gold. Earlier in the week, I spoke about the patterns here on the weekly, and kind of like this was shaping up, but this wasn't really in alignment with it. So maybe gold continues, it comes to test down here. I don't know. It's just going sideways. So I just look at this and I have some views on what it might do, but for what it's doing right now, I'm not interested in doing anything with it. I'll see if this pivot holds or whatever. And silver, just messy as well. It popped up and becoming a trading range for now. So, I don't know whether it'll make a higher level of a trading range or whether it'll need to, come back down to the next pivot. So unless something just pops out at me as, yes, that's the picture I want, I just stay away from it because it doesn't make sense other than to know it's going sideways right now, and we'll see if it holds here. It's Friday, SPX. Well, I haven't looked. I don't know what the premiums are, but it is all about how far you can get away. So this has got the void. As I said, here's a resistance area. Right. So I would say if you can get above 35.20, right, that should be a safe zone. And down below, well, we got the unfilled gap. So if prices should move lower this morning, that unfilled gap would be a target area for the next move down. So as we see these kind of moves, what we would look for, if it continues to go down, this began to happen yesterday where the downside momentum slowed, but then it just went sideways and it didn't pick up. This is where, I and I think a few others went long the ES, and eventually we got stopped on that. But as it started to go sideways, then, I think it was around here. But what I had pointed out was the momentum slowing. Just getting my drawing thing out here. What we look for, and we could look at on a longer time frame here as well, if it was to come down here. But you see how this is big momentum, and then it dropped again, and the lows are closer together, and it held there for quite a while, and then it tried to move up, but then eventually it failed, and it popped back up again. And so what we just look for is, as prices go down, what is the distance between the reversal bars where it starts to make a turn. And so if this was to come down here, obviously, big momentum, and it went down, and it comes down here, and we just look for a turn to begin to happen. So with SPX, I would say, if it should drop, we always look for where's the next level of support. So you have the unfilled gap, and while I don't think we would get, if we were able to get premium down here, that's where I would be looking. But if there isn't, I guess somewhere, I guess around that area, 3,400, getting below that, figuring that buyers are going to show up into the gap fill. So there you have it. I looked at Silver JR. Good time to buy calls on tech for 3 months or so away. I think they'd probably, John, I'm guessing, but I think there'd probably be better opportunities. These kind of drops typically has another, bout of selling that comes in. There's a lot of people holding losses here. Remember I said there was a buying frenzy. We all saw it, as things went up. But it could have continued to go up, and obviously it didn't happen. Yesterday gapped down, and that was a bit of a shock, and then it didn't recover. So, everybody that was buying here are holding losses. So any retracement after such a nasty day, think about what you would do. You can say, like, let me just step aside, cut my loss, maybe a break even, and you're like, kissing up to the sky or whatever, you got out of this disaster. So the expectation is that there's going to be another bout of selling to come in here. And so if that should happen, and, prices come down into this level where this major support is, then I would say, yeah, let prices drop like that again, maybe next week, an ugly day, and you might want to look at that to buy calls. And maybe even, whatever your favorite stock is, you'd say, well, down here, why don't I sell some puts? I'm willing to buy it. So that'll be some of the opportunities that'll be coming up, assuming that we do get that next wave of selling, is that as prices fall harder into stronger support levels. What are stronger support levels? Where it's gone sideways like this, you sell out of the money puts. Goes down some more, sell some more. Right? So there you go. Would you?
Yeah, Greg. Greg, yeah. Just to add to that option strategy discussion, I know you're just focused on the charts, etc. But one thing to keep in mind with volatility spiking, so buying calls or puts are going to be very expensive. Now, good segue to my new directional course. We just launched yesterday, directional options. So when you have high volatility, but you still want a directional, right, McGraw, I was going to say, so selling puts, without a doubt, that's my favorite strategy. Like we were cleaning house during the March sell-off, because volatility made a record. Remember, darn thing went up to 90 or whatever the heck it was. It exceeded the prior highs. which is the highest I've seen it in my lifetime. So that's a beautiful recipe for selling puts at a bullish turn. But back to the directional long, you're better off buying deep in the money calls so you don't pay much time premium. Or, as McGraw said, yes, you're buying a high long call, but you better sell a further out of the money expensive call too, to offset the very high price of the high options that you are buying. Or number three, you know, see if you can nail the entry, buy your long call, but you just have to be cognizant that the directional move has to be bigger than the time decay, because as the stocks start and markets start moving up, volatility is going to contract. So, you know, theta is going to be hurting you hard. So anyway, those are just a few tidbits on buying options after a sell-off when volatility spikes. And if you want to learn more, take my course. So good promo there. All right, share screen. All right, I in the video last night, I said we were, Khaled, we sent an email. So I'm surprised you didn't get the email. Greg, do you mind giving Khaled here the link where I continue here? But I was in kind of in defensive mode yesterday, tightening stops, protecting a lot of open gains. So our inventory is significantly down from the day before, you know, rightfully so. We were trading the longs until we saw the fire exit. And that's what we've been saying since this whole run. We will trade bullish patterns, but we knew things were getting heated to the upside with extreme momentum and bullishness. And, you know, yesterday was the day. All right, today, yeah, this could be making a reverse head and shoulders kind of looking thing. Head, left shoulder, right shoulder. So as long as we go sideways here, 30-minute high, I'm all about selling 0 DTE put spreads. Diamond's stronger in the sense of the retracement is deeper into the resistance. So for a put spread, I like spiders better. IWM is actually the deepest retracement, and so, you know, we'll see what's going on there. Q's weaker, obviously, still in the downtrend, so I really have no interest in that. I did able to get us into a bear call credit spread yesterday on the Q's. We covered half, and I sent out a text saying move stop 30-minute high, and let's go ahead and take our big gains and be done with it. All right, let's continue here. MIK, I just saw it going by the ticker here. Could, you know, sloppy daily, but could be a day trade. CVAC, I was going to post this as an official trade. No, Ed, because it's gapping up. So no, Beyond, Ed's asked me about Beyond. You know, we did a put spread on this, and you know, we got caught in the sell-off. But when we entered a put spread yesterday on Beyond, bullish gap, breaking out over these 3-day highs, it looked fantastic. So no, Ed, we're fine to keep the stop now. Citigroup was another one, and I'll get to a couple banks, but I see banks perking here again. JP Morgan, MS. So I kind of like this one the best because it broke out. It's in an uptrend. So I got, yeah, Morgan's right here on my list. But back to CVAC. No, I don't like C. Like I just said, I like Morgan better. All right, CVAC is a bio. And if it wasn't, then I was going to post this official as a 30-minute high. And the reason is I like watching IPOs. So here's the big IPO day, crazy gap, slopping around, momentum slowed, bottoming tail, 2 inside bars, now we're gapping up above this. So it's a perfect technical entry, 30-minute high, if you are so inclined. But we don't trade bios, or at least not swing them, unless we make an exception and say we have one or two bios related to the coronavirus kind of theme, but they got to be so compelling. And I just give a disclaimer. I notice, on the ticker, a couple of the junk, what I call junk sectors perking. Airlines had a good morning yesterday. And then got slapped down with everything else, but that's okay. Let's see if it can rebuild. Look at the weekly. Look at the weekly on UAL. Next Wednesday, we'll be talking about bottoming patterns, and this is bottoming. Yeah, we're in RCL, and you know what? We're short the $70 calls, and I sent out a telegram saying, you know what, let them have it, because it's sloppy. And we have, here, let me give you the numbers here again in case you missed it. We, by selling covered calls, look at this, where are we? 60, under 63 is our cost basis from selling covered calls. So if we have to sell it here at $70, well, that's 10% return. It's rallied to a prior high on the weekly, and then I said we'll look for a better entry. CCL, yeah, the foreign sister company is Kook. So Kook, yeah, in terms of a new entry, Alex, I agree with you. This is now a better new entry over RC. It's lagging. Our RCL was actually outperforming, but we'll take our money on it. So let me put these in here. So it's a, patterns don't have to be perfect, but this is well, it's harder to see with the data scrunched, but it's going to reverse head and shoulders. Left shoulder head, big old right shoulder. So that's a head and shoulders. Close enough for government work. McGraw used to work for the post office, so he doesn't like when I say that. But that's why he retired. He kept delivering mail to the wrong plantation and too many complaints.
Dan, you have a strange sense of humor, but sometimes it's so entertaining.
And saved by the bell. All right, Mark, let me see what you got going on. Hey, Mark, yesterday was very, very unusual. And, that's why I was playing defense so much. And in retrospect, those trades, we did Boeing, we did Citigroup. And I mean, look at this nasty reversal. We didn't do anything wrong. I mean, look, go back and see the time that we sent the alert. Look at this wide range breaking out of all this. So we sold a way out of the money put spread, and it held, and then into the close hit our stop. And it's not the time to say, well, I mean, unless you don't mind owning it, it's not the time to say, well, I'm going to abandon